next speaker is Alessio Rutiliano. And Alessio is very much a kindred spirit of mine. And he is, as you know, many of you know, I am a point and figure fanatic. I should be in therapy about this, but I'm not. And Alessio has taken point and figure, among other principles of Wyckoff, and applied them to the very volatile crypto markets, and has innovated very important point and figure and vertical bar chart technique to deal with the incredible volatility of these markets. And so with that, so I'm always just thrilled to hear Alessio speak. Alessio co-hosts the weekly Wyckoff Crypto Discussion and Wyckoff Crypto Discord with Roman. He taught the special topics courses, Crypto Strategies with Swing Trading to Intraday. And by the way, okay, so I did share my screen. Okay, I forgot. Okay, sorry about that. And also, he has spoken at the Best of Wyckoff online conferences in 2019, 2021, Wyckoff Cryptocurrency Online Conference in 2020. He curates the Wyckoff in the World of Cryptocurrency, a blog introducing Wyckoff analysis and trading tactics to low liquidity speculative environments, including crypto and emerging asset classes. And so with that, we are very thrilled to have Alessio as a presenter today. And Alessio, can you hear me?
Hi, Bruce. Thank you for your kind introduction. Very glad to be here today.
Oh my gosh, it's so good to have you. And please go ahead. You should be able to take the screen, and I'm very excited to hear your presentation.
Great. You should be able to see my screen now.
Here it comes.
Okay, perfect.
We can see it.
Perfect. So hello, everyone. So I'm very glad to participate in this webinar. And today we'll discuss how to navigate crypto markets through the lens of the Wyckoff method. And crypto assets are known for their extreme volatility. We need a very good framework to operate in this very fast market. So I have a strong conviction that the top-down approach can really help us to identify the best opportunities in this space. Tape reading, comparative strength, and point and figure analysis applied to crypto assets work very well. They are the pillars of our methodology. So our team has developed a Wyckoffian framework for cryptos. We have launched our Wyckoff Crypto Discord channel. This is a platform where you have access to a weekly webinar totally devoted to cryptos. 30 minutes every week. Roman and I discuss the general outlook of the market. Then we analyze the crypto index, Bitcoin, big caps and small caps, and look for good candidates in this space. We know that this market moves very fast, and sometimes a weekly perspective is not enough. So for this reason, every time I see a change of behavior in the market, I publish a flash update, just a screenshot with a very concise message for our subscribers. But if you want to interact with our students or submit your charts or, for example, ask specific questions, we also have a student group. It's a private chat devoted to this methodology. And finally, last but not least, we have lately added to our platform specific tools like the crypto heat map that can help you to identify the best performance, thanks to Howard, a member of our Wyckoff Analytics team. But now it's time to analyze the market and show our process. So we see here that in every episode of our Wyckoff Crypto Discussion, we look at the general market, in particular the S&P and the Nasdaq, and define the outlook. We always want to define the environment first, since we know that cryptos are strictly correlated to tech stocks, and this sector has underperformed the market since the beginning of 2022. So our primary goal since the beginning of the year has been to preserve our capital, lock the gains made in 2021, and look for short-term opportunities. We see here that Bitcoin and Ethereum are forming now very complex structures, but we can dissect these trading ranges using our Wyckoff analysis. So trading ranges in the crypto space tend to have this complex look, And this is very, very interesting from the analytical point of view, but also from the tactical point of view. So the first layer of our process is the relative performance analysis. The line that you see on the bottom of this chart is the ratio between the asset and the total crypto index. We always want to know if this is crypto asset is performing against the whole sector in a good way, or is underperforming, outperforming. So just looking at this line, we can extract important information. For example, the underperformance of Ethereum from April to July was a signal that the animal spirit of the market were on the sidelines, and we had to adopt a very conservative approach. As the relative trend line for Ethereum was forming a base and then reversing in line with the whole market, Ethereum provided a much better opportunity than Bitcoin in relative and absolute terms. After this rally, we've been extremely conservative in late August and September, especially with the overreaction in the stock market. But there are signs of extortion supply in this whole formation, a contraction volatility in October, a first attempt to break the 50-day moving average. But what happened next? Look at this huge down bar. So the FTX collapse has derailed the structure, high volume, big spread. But on a comparative basis, Ethereum is still making a high low compared to Bitcoin. And the ability of price to reside in a tight range on decreasing volatility is telling us that supply is gradually exhausting. At this point, we don't want to see another failure against the 50-day moving average, because in order to confirm the absorption, we want to see a clear commitment above this line. And the same logic applies to Bitcoin. So we don't want to see a failure at this point. So the conditions are there, but we need to assess how much supply is present in the market, in the stock market today. After yesterday's Fed's meeting, we have seen lately improving conditions for tech stocks, but we really want to see a clear sign of risk on mode for the market. So right now we are not ready to pull the trigger, but we want to closely observe how price will react to this line.